Hey traders, hope you guys are all doing great today. So going off the trading strategy that I showed you yesterday, I just want to show you the setup that I took today. So this was the entry. This was the trade as it progressed, and this was just the moment before I closed it. A nice $1,300 profit. So if you watched my video yesterday, I'm just going to explain it to you a little bit better today. It's the same strategy, just a slightly different version of it. So this sort of entry you can get in a little bit earlier, and it can improve your risk to reward as well. But overall, it is basically the same strategy, but it's pretty exciting stuff when you know how all this stuff works. You can be consistent with the strategy. So basically, this was the trade over here. Right over here. So it was this little breakout trade right over here. Stop loss was just below the low. So it turned out to be a 1 to 2.3 risk to reward. Just as I closed it. Luckily I did, because it pulled back. But basically, so it was that there, just that little push up right over there, if you can see that. So how it all works is basically, I'll just leave that up there anyway, just so you can see it. So basically, what I'm looking for is, as the market starts out during the day, I'm looking for the market to build up, and I'm looking for the market makers to engineer liquidity. And I want to see a little bit into the session, say a couple hours, maybe 4 to 5 hours into the session, even going into London session and so on. I want to see where has the market makers, where have they engineered liquidity, and where are retail traders? Are they short or are they long in a certain situation? So we can see over here, the market opens up, pulls back, gets a lot of traders short in here. In this situation right over here, looks like a very good short entry. The market's, it is in an uptrend, but it looks like it's really been pumping, and there might be a time, it might be a time for it to pull back. The market pulls back very slightly, pushes up. Okay, then it pulls back with these two candles a bit. Okay, this is when I started looking at the market, because now I can see like a double top formation. And I can see that the market makers have engineered liquidity for traders to go short. Okay, so at this moment over here, I know that there's liquidity sitting above these highs, okay, because the market makers, when they engineer this liquidity, they're engineering, obviously, retail traders stops. And another thing they also know is that retail trade, they know the size roughly of retail traders' accounts. And they know that a lot of traders don't use stop losses, and they can basically squeeze all that capital out of retail traders' complete accounts. So it's not just stop losses they're looking for. They're looking at retail accounts, and they have access to the sizings of those accounts. I'm pretty sure about that. That's why you see these massive trends form in the market, because they're taking all that money from retail traders, and they're just continuing that trend, because the price can't move by itself. It has to take liquidity, take retail money as it moves. Okay, so if we look here, we can see that what I knew was that there's going to be a ton of retail stops in this level. So there's money above here. Okay, so I know that there's money in this region. Okay, so let me just remove this. So there's a high over here, then another equal high over here. Okay, so then what I did was, let me zoom in here. Okay, so we know that there was this high, and there was this high over here. Okay, we know that a lot of retail would be short now, based on these two, based on this price action, and this is a very good setup to me. I'd also probably be short here. So I wanna look at the market as it's built up and see, okay, where are retail? Are they long or are they starting to go short? Where would I be as a retail trader? Would I be short in this situation, or would I be long? So once I saw this candle, these few candles right over here, I saw this doji, I saw this bullish candle, I saw another red candle, but once I saw this candle here, I knew that it's more than likely that this market is going to go up for a while to grab retail stops. So I entered a long right over there. I was explaining that yesterday that you can also wait for the break. Let me just remove this. I was explaining yesterday that you can also wait for the the actual high to be taken out. But I thought, you know what, this is very good chance that this is going to be going up based on how much liquidity has been engineered above here. So after I saw that candle, I got in and I took, as I showed you on the screenshot, a nice scalp, a nice 1 to 2.3 risk to reward trade. So it's quite simple. Once you figure out what these market makers are doing in the markets, you can see all these liquidity pockets that they build before they shoot up. So you always have to think, where are retail traders? Are they long or are they short? In this region, a lot of retail are short. So this is all the market makers doing. All they are doing is engineering this liquidity, getting traders short, and then driving the price right through their capital, right through their stop losses. That happens over and over and over again, especially in trending markets, but it can also happen in ranging markets and all of that. Okay, so we can see even here, this high over here and this high over here. You can see nice little green candle over here. Even with this red candle, they're engineering even more liquidity, getting retail short, and then just drive the price up. It also happens on downtrends, but this market is super bullish at the moment. They'll do it. They'll induce traders with these situations. And then once they've scooped that liquidity, then they'll drive the price up. So you want to spot where are retail stops? Where are they most likely? In this case, we want to chase this market downwards because we know retail traders are long. And this would be a nice little scalp trade down. Even from here, you could take this trade as a breakout. Nice candle or two going downwards, nice 1 to 2 or something like that. Okay, so it's, as I showed you, it happened on gold and NASDAQ on Friday. I took the gold setup. Okay, but sometimes it'll be, you can even see here, they're building liquidity above here, so this might even be a longer move up. So always think, where are retail now in the market? Are they short or are they long? And we can join in with the market makers and take advantage of retail stops instead of trying to predict the top, predict the turning point. Instead of you trying to predict the bottom of the market like this and try to catch this move, instead of you trying to predict the top, when things are all looking nice like this, it's very difficult to predict the bottom and the top of the market. But it's much easier to just take a bit of that retail stop as a nice scalp trade. Leave a comment, subscribe. Also, if you're interested in using a really good broker, click the link down below as a thank you for the strategy, and sign up with the broker that I use. I am affiliated with them, but I don't get much out of it, but really good broker. That's why I promote them on my videos. So If you want to trade this strategy with a broker that is really good tight spreads and zero commissions on the standard account, use Vantage Markets. The link will be in the description. Hope this video helped, and I will catch you in the next one. Peace.